5 swing trades for 2022. Wild and crazy year. We had a market that just could not sell off, yet the majority of stocks were actually selling off under the surface. So there's actually some opportunities out there for some long-term investments and swing trades. What are we looking at here? Well, first, make sure you pound that like button down below and subscribe to this channel so you can get notified on all future videos, as well as click the join button to become part of my YouTube membership, where you'll get all my stock market research each and every day. My first swing trade for 2022 is PayPal, symbol PYPL. This stock took a 19.5% hit in 2021. It was brutal for traders to stay in this stock, but could we be seeing the beginning of a long-term base forming in the stock? Well, it's starting to look like it. I mean, just look over the last month here. We've finally seen what looks to be a basing pattern, and what you want to wait for is when it breaks out of that basing pattern to get long on. You don't want to get in beforehand, because what it could ultimately be is a holding pattern before it eventually breaks below this key support. But for now, it's holding major support. And this support goes all the way back to July of 2020. Very strong, and it's holding up very well right now. So if we can get above that 194, 195 level, this has the potential to run back up into the mid 200s, especially if the market holds up. And you got to remember, this is going to be key throughout the whole year. There's a lot of potential headline risk that traders are going to see in 2022, a lot of it involving the Fed. You also had the Russia-Ukraine situation, the China and Taiwan situation. You had the Fed tapering. You had the Fed looking to raise interest rates this year, and even in the first half of 2022. So all of those pose as potential headline risks, to where if the market does finally see a major pullback, most stocks will not be spared. It doesn't matter how much they've dropped in 2021, most stocks will not be spared. So all of these picks are contingent on the market doing well again this year. And the reason why I do that is because there's no such thing as a stock that just goes up no matter what. It just doesn't happen. Stocks are highly influenced by the overall market conditions. Probably about 60% of a stock's moves are correlated back to the stock market as a whole. So if you're going to manage the risk, you've got to take that into account with all of your trades and investments for 2022. But again, I like this base here. I like this strong support level that's going all the way back to July of 2021. So that gives you some firm support at around 178, going all the way back down to about 172. I would say the line in the sand for PayPal is going to be if it breaks below the September 18th, 2020 lows. That's going to give you about a low of 171.63. If it breaks and closes below that, you want to move on from the trade, because at that point, it's not basing anymore. It's breaking below major support, and it's making some new lows that hasn't been made in a very, very long time. And those support levels are breaking that have been previously held in times past. But if all goes well on this trade, I would look for price targets between 255 and 300. My second one involves a stock that's dropped 41% in the past year. Incredible sell-off. This one is DraftKings, and you've got a lot of momentum right now to legalize sports gambling in almost all the states. There's petitions going around in most states. There's going to be, in the 2022 election year, opportunities for voters to legalize sports gambling. So you got DKNG, possible double bottom that's forming here in the very short term, bottom one and bottom two. But that's not enough to just get long on it. It needs to break above these highs formed on December 22nd. If you get that, then you confirm the double bottom. You get back above this 20-day moving average that continues to push price lower. Now, if that can hold, then you have some resistance around the 45 level. But at that point, you are sitting on some really nice gains if it gets up to this 45 level. So you want to be taking some of those profits off the table at that point. But as you scroll out on this stock is sitting on some pretty good support going all the way back to July of 2020. This support level has held so far. It's not been a perfect hold, but anytime it's been tested and it breaks below, it usually recovers by intraday or by the next trading session. So with the potential for a lot of states legalizing sports gambling, DKNG is in a good place to profit off of that momentum, and for you to be able to get into a good price following a very disappointing year for the stock. Number 3, under new management, a new CEO. It's one that you've all heard of before, and most of you guys probably have an account on. It's Twitter, down 20.2% in 2021. This stock looks to rebound as well. A very similar basing pattern that you saw on PayPal. You're also seeing that on Twitter too. I also think that if the market starts off on a good footing, this is one of the stocks that's probably going to gain a lot of attention of traders. But once again, you got to be patient with these base breakouts because not all bases necessarily mean they're going to break to the upside. Sometimes it's a holding period for it to take the next leg lower. So of all 5 of these stocks that I'm going over, I don't expect every one of them to be miracle workers. That's just not how it works. If 3 or 4 of them work out great, this is a good video. The ones that don't work out, you want to make sure that you're managing the risk and that you're putting those stop losses in to draw the line in the sand. For this one, you're going to see on the weekly chart, it's also sitting on some major support going back to 2018. When you draw that line, it makes multiple tops going back to 2018, 2019, and now it's sitting on a 200-week moving average and above a major support level. So you're looking for the bounce here off of oversold conditions on the weekly chart, a break below this 200-week moving average, more specifically below the December lows of $42. You want to be out of the trade. There's no reason to hold it at that point. Wait on the daily chart for at least a move over 45.40 just to clear some of this consolidation that it has been stuck in of late. Yes, it's a very tight stop loss, but I also like to find out pretty quickly of whether or not I'm going to be right or wrong on the trade pretty quickly as well. I like to win slow, lose fast. Number 4 on my list is a company that was down 25% in 2021. It's big into podcasting and streaming music. Yes, it's Spotify. When you check out this chart, zoom out a little bit, draw yourself a trend line going back to the COVID lows, and you'll see that it's held this support level off of those lows quite well. The problem with it has been, it hasn't been able to put in a higher high going back to the highs that were put in early 2021. Instead, that marked a high for the stock and it resulted in a slow trickle lower that never could hold a bounce in any substantial way. Again, Spotify, it's one of the big players in podcasting, streaming music. It's a big player going forward. I really like it off of this major support level. If it breaks and it makes a new significant lower low, let's say below the August 19th lows, which would be at 201, then there's no reason to stay in this trade. If you want to play it a little bit more conservative like myself, I'm looking at a move below 216 that would take me out of this trade. Nonetheless, to get into it, we need to get this base to work positively for us here. We need to see this move sustain itself, not just on an intraday basis, but it needs to sustain a move above this declining resistance on a closing basis, which it has not been able to do yet, break above that and close above 243 to really get the momentum going in the bulls' favor. Right now, it's still consolidating, needs to break out in a significant way to get long on. And number 5, a $40 billion company. Didn't take a big hit in 2021. It was down 6.8%. That might surprise some of you guys when I tell you what the stock is because there was a lot of momentum late in the year with this company. It's Unity Software. Unity Software works with a lot of companies in the video game development process and with the video game in the post-creation phase. I love this trend line going back to May of 2021. It has held it very well and held it again in December, just like it did in July and in May. Significant rally in October and November. Big pullback, held the support. Now we're looking at a potential consolidation here. If it breaks below the December lows, I'm out. I don't want nothing to do with it. You could be even a little bit looser with your stop loss if you wanted to by putting a stop loss below the lows from October of 2021. But if it breaks through the December lows for me, I would be out of it. Declining trend line off of the November highs has broken. You got this nice consolidation, and it just needs to get back above into the 150s in order to justify a long position. Again, not all these stocks are going to be huge winners. Some of them will not work. That's just the reality of trading. Nobody bats 1,000 in the stock market. No matter what anybody claims, just doesn't happen. That's why you got to have stop losses. That's why I highlight the stop losses in every one of these videos, because without them, even if you're right 4 out of 5, it can be just that one stock that ruins a year and ruins a portfolio. Thank you for putting up with me and my raspy voice. I got a little bit sick over the holidays, but I wanted to give you guys my 5 swing trades for 2022. If you have any questions, let me know down in the comments. Let me know as well. What are your favorite stocks for 2022? What are you looking to invest in? Thank you guys, and God bless you in 2022.